Hello, 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 YouTube sphere. Why does my camera look so sorry, y'all? I'm like, why it look so blurry? And y'all get to see everything in the background, but that's okay. So we are back. Let me start my other ones here. IG and Facebook. Your girl is back. And I'm back for another one. You know I gotta start off with a smile. You know what I mean? So it's Real Estate Thursday, people, at 12 p.m. I had to come and do it. I haven't gone live. It's my birthday month. So I'm here to make sure that I bring you all of this sauce. Do you hear me? All of the education that you need because you shouldn't be waiting to 2027 to buy a home, especially here in Detroit. So I am Toria Howard and I am the real estate educator and I'm here to educate you. I love what I do. I'm an educator in real life, but I've been an educator for a long time, since 2003 when I was just the mere age of 22. And I just love what I do. But I am really into just teaching people about real estate, financial literacy, and the things. So here we are today. I'm here for a short time, not a long time. So let's get it going. So I have a lot of people talking about how they're going to wait to 2027 to buy. And let me tell you, I get this question all of the time. Should I wait? Should I wait? Should I wait? But the real question that nobody's asking is how much is it going to cost you if you wait? A lot of people are waiting to, 2026 is just halfway gone. A lot of people are waiting till they get their to next year to get their finances in order. They want to do all of the things. But this is the time to get your finances in order because we about to see a new world order in our finances, in all of the things that we think of as far as investments, financials, and everything. And the best thing to do right now is to get your financials in order. And if you want to become a homeowner, you should definitely not wait until 2027 because if you've been following, prices are not dropping. Now, if interest rates still stay high, they saying like the prices got to meet, but values are growing because there's so much redevelopment going on. And you have to make sure that you're following the trends. You are not trying to go somewhere that has already been developed. You want to go where it's going. So, because, people are waiting till the rates drop, home prices may continue to rise. Rent is going to continue to increase and someone else could be building equity in the neighborhood you want to be in or the neighborhood you thought was lost and gone and guess what, you see it in a couple of years and has turned around. So you need to make sure that you understand that you're weighing the cost. So waiting has a cost for most people that most people don't calculate. And if you look at the numbers, like in people are thinking that they can still buy in Detroit for, you can get a house for 60,000. People are like, oh, the houses are too high. Inflation values have risen because all of the redevelopments. And I'm not just talking about here. We're talking about in all of the Midwest states are doing the same thing, especially Cleveland, Detroit, Milwaukee, Chicago has always been, doing their thing. And they have neighborhoods in Chicago that are being redeveloped as well because people have left them, lost them, or whatever because they were the hood, it was dangerous or whatever, and the people are coming back to these neighborhoods. Just like here, the Dexter Linwood area, people running down the street, they have a whole bike lane. People, I had people coming on my comments of the house I posted over there. I think it was on Pinehurst, and they kept saying, "Oh, it's a dangerous area, this and that and the third." And I just went on there and educated them on, it's a multi-million-dollar plan for the area, and they got upset because I said something back to them. But I educated you, right? Because every time we think of something as dead, old, or whatever, somebody is seeing it as potential, and a lot of people are seeing that Russell Woods area as potential. You already have homes over there that are selling over 300,000. So nobody would have thought a home in that area would be, 300, almost 300,000. So you have to make sure you're following, and all of this is on the Detroit website, Detroit City of Detroit website. It's not like it's hidden. So the number streets, the um, they used to have the projects that has a multi-million-dollar plan. Built Brightmore has a multi-million-dollar plan. They're redoing Cooley. Davis Aerospace is moving back. It's a lot of moving parts that's going on at once, along with the development that's going on downtown. Then you have that whatever is developed downtown is going to move outward. And then you have the Joe Louis Greenway. That wasn't supposed to be done until 2020, 2030. That's supposed to be done in 2027. So all those 28 zip codes along that is going to increase as well. Anytime you see redevelopment, property is going to appreciate. And that's just how that works. So if you wait another year, how much rent will you pay? Right? So for instance, if you pay $2,000 a month in rent, that's $24,000 you didn't pay in a year. You have paid somebody else $24,000 in 1 year. And guess what they're going to give you? They're going to give you a notice to say, hey, we're going to increase your rent again. Did you know you can negotiate your rent though? If you haven't had any improvements, if there has not been any type of upgrades to your apartment, you can keep your rent the same. And understand that I'm not here to tell you, everybody doesn't want to buy a house, cool, but you can also negotiate your rent. Because if you haven't had any renovations, any improvements, you don't have to pay inflated prices. Because I'm telling you, they need you more than you need them. I mean, you need a place to stay, of course, but they need you more than, because they don't want to have that carrying cost, because they have to pay for every vacant apartment. It's a cost. They don't want to pay that cost. They'd rather have some money in there. So getting something is better than nothing. So, for example, I'm gonna give another example. If you average rent is about $1,500, right? In 12 months, you've paid $18,000. In 18 months, you've paid $27,000. 24 months, you've paid $36,000 in rent. That money that you're paying in rent is a whole down payment. $36,000 is like 20% of a $360,000 house. Just saying. So you have to understand that you are paying the same thing. You have to pay for somewhere to live. Now, people say, oh, well, you got to maintain the property. Of course, but you buy in the right area, you buy right, you budget right, you can put your maintenance fund, your 1% maintenance fund, in the cost of your mortgage. That's how that works. It's all about budgeting. A lot of people got away from budgeting because we got everything so convenient. We tap, we swipe, we do this, we do that, pay online. People don't do budgets anymore. But if you break it down and understand, if you add in your maintenance, if you watch my other videos, I put this in there. Your maintenance fund is 1%. Your utilities, your home warranty, into your cost of living, to your mortgage, you will have your budget. And guess what? You will know exactly how much you can afford. So if $1,500 is what you're paying a month in rent, you're not adding your utilities and the other ancillary costs that comes with renting as well. You can do the same thing. So for a $1,500 mortgage, you would need to save $1,500 a year for maintenance. But you have your home warranty and your homeowner's insurance that will help you with that part. If something happens dramatically to your home, that's where your homeowner's insurance come into play. If you have something mechanical, that's where your home warranty comes into play. You're doing the same thing because you're paying for pest control, renter's insurance, water. You're doing the same thing as a renter. So most people focus on the interest rates, but ignore the money leaving their account every single month. Yeah, everybody want to fight about the interest rates, how high they are or whatever, but you don't even understand how that even works when it comes to a mortgage. So what happens if home prices continue to rise? So a $200,000 home today appreciates 5%. So appreciation on average is 1 to 5% across the United States, right? That's the average appreciation rate. But neighborhoods in Detroit are you're seeing 7%, 12, 15, 18, 20% appreciation because of the redevelopment. So let's just take it small. So the $200,000 house appreciates 5% every single year. It's going to jump to 210, then it's going to jump to 220. That same house requires more down payment, higher monthly payment, and more cash to close. So the longer you wait, the more it's going to cost you. The home didn't change the price, the houses appreciate. That's why people invest in real estate. That's why billionaires invest in real estate, because homes, real estate appreciate, land appreciates, especially when there's really redevelopment. So the third thing I want to go over is Detroit is not the same as 10 years ago. This is 2026. In 2016, Detroit was looking very bleak, very lost in the sauce, very look like dead. Look at it now. You walk downtown and you just see it. It's a whole different vibe, different feel. Some blocks you walk down, it's a whole new vibe, a new feel. So you got the Cosmodome that's coming, because we're a sports town. So with the Cosmodome, that's going to bring more jobs, which means more people going to need places to stay. So housing demand is going to increase, right? So knowing that this is going to happen, you need to make sure that you are operating in a sense that you know that things are coming. You need to get in there. So the Cosmodome, then you have the WNBA team that's coming, the soccer team that's coming. We having the Final Four here next year. They're adding 1,600 new hotel rooms. The JW is about to be finished next year. All of that's going to bring jobs. Anytime there's a jobs, it's an economic surge. So anytime you have new jobs, it's an economic surge. That means housing demand and appreciation for land and houses are going to increase. Then we have a AI cybersecurity company. I can't think of the name off the top of my head. If you know, our audience is watching. It's an AI cybersecurity company who's moving from Maryland. They're moving their headquarters. Okay, from Maryland to Detroit. AI cyber. So we are edging in tech. We have a lot of different tech opportunities here. Shout out to Black Tech Saturdays. And DevOps and all the other different tech, organizations and businesses we have here. That company is going to drive up. It's bringing 800 jobs, and they're going to train people. So those people are going to need a place to live. So that's going to drive up, demand. Now, this might seem small, but 5,000 people moved to Detroit last year. That might seem small, but population growth, appreciation of real estate, okay? Then you have all the other neighborhoods that are being redeveloped, okay? You have the new center area. They doing the Motown is getting redone. You got a new hospital. Then there's other developments around that area. Of course, downtown is being redeveloped, and people are forgetting, like everybody thinking about the concentrated downtown, but you're not thinking about Jefferson Chalmers. You're not thinking about Rivertown. That's further down Jefferson, the 48213, the 48214, and the 48215. All of those are getting redevelopments, and investors are pooling resources together to redevelop those areas. I just saw a home over there sell over $200,000. Nobody would have thought that a home over that area was dead, would sell for that much, but it's doing that because there's a lot of real revitalization going on across the city. Then you got the Joe Louis Greenway that's going to connect Dearborn to downtown. That's 28 zip codes from east to west that's going to be affected by appreciation. So People are continually investing in the city, doing the things that they need to do to, invest in the city. You should be do too. You should be investing in yourself first, though. First thing that you need to do is invest in yourself. People, you can do whatever it is that you want to do that fits your family dynamic, right? So some people say you house hack, right? A residential, you can still get down payment assistance for a 4 unit building. It's still considered residential if you did not know that. So if you buy a duplex or a two-family flat, as sometimes we like to call it here, a triplex or a quad, that is still considered residential. If as long as you occupy 1 unit, you can still get down payment assistance for that. So you can house hack, you can buy a single family home for just yourself. And you can take the equity, because if you buy right and you buy it in those areas that are already, they're redevelopment, your appreciation is going to jump. Now, when your appreciation jumps, your value goes up, your taxes go up. So you have to think of that too. People want the revitalization, but they don't want the tax increase. And Detroit is trying to, combat that and help homeowners with that. But that comes with the territory. Um, so you just have to make sure that you're understanding. So those are just a few developments that I, talked about. U of M is building a new building downtown. It's a lot of different things that's happening around our city that people are missing and people are not realizing. Because I told you, I had two people arguing with me on, or tried to argue with me on my TikTok, talking about the Dexter Linwood area, bad area, this and that and the third. Have you rode through there lately? The city of Detroit has $100 million plan for Russell Woods. And they're putting a horse tech farm on Linwood. Who would have thought that? That's where I'm from. I'm from that area. Nobody would have thought that a horse tech farm would be for kids. It's going to be on Linwood. You don't think people are going to want to move there so their kids can go there? It's a lot of different redevelopments. It's a multi-million-dollar plan for Brightmoor. And Brightmoor has some of the best soil for growing things. They got community gardens. They have flower gardens, all types of different stuff going on. Brightmoor has become like a little community in itself, where you can go and pick flowers and plant stuff and do different things there. And as a Detroiter, you already know when people say, "Oh, I got to go to Brightmoor," you already know you was going for one or two things, maybe three. I'm not going to discuss it, but if you're from Detroit, you know what I'm talking about. So that area is getting redeveloped. The Cooley High area, that's the Grand River Finkel, all of that Hubble, that's going to get redeveloped. 48235, the Schaefer area, people are renovating over there, doing houses beautifully over there. 48221, the Fashion District, the University District, still has high value homes. Sure, that's part of Sherwood Forest, and then Rosedale Park, all of those different historic areas that are having redevelopment around it. Businesses are coming. Anytime you see new businesses coming floating in, they know what's going on. Now, if you see a Chick-fil-A pop up, you already know what the deal is. So people, bought 5 years ago aren't asking if they should have waited, because they are sitting on so much equity they can do whatever it is that they want. The fourth point I want to say is the wealth gap most people miss. Do you know the difference between a homeowner and a renter after 5 years? Understand this. So homeowners gain equity, appreciation, tax advantages, leverage. You can use your home to buy other businesses, invest in other businesses, buy another house. Use the equity for that. Buy stocks. I know a lady that I was talking to before. She used her equity to invest in the stock market. And she buy and sell homes all the time. So you talking about equity, appreciation, tax advantages, and leverage. Those are the four things that happens when you invest in yourself, right? And then if you rent, you got housing. but there's no ownership. You can, so if you rent a house, somebody can sell it from right up under you, without you knowing, whatever the case may be. I've had clients call me like, my landlord is still at my house, I got to move. That's the cost of non-ownership. They can do whatever they want to do. I had people fix up people's houses that they rented in and then they sold it. You know, ownership is the name of the game. Gaining assets, and I know people say, "Oh, a home is not an asset. Your personal home is not an asset because you have a, a mortgage on it." But you have to leverage the debt. That's what wealthy people do. They take that money that they're getting from their equity and they're going invested in other things. So that's the name of the game, ownership, so you can accumulate assets. So housing is an expense for everyone, and you're going to have to pay for it anyway. So make sure that you're understanding that you are not going to miss out because you're renting, but you're going to miss out on that ownership, and then you're going to continuously see your rent increase. So, what if rates drop later, right? Many people think that, rates are going to drop and they're going to wait till it come down. But if rates drop, that means more buyers are entering the market and competition increases. Like, people are so up in arms about the interest rates are high. The housing prices are going to increase too. So either you get in or you get left out. So when that does happen, you have multiple offers that you might not even get the houses you're looking for. And then prices often rise. Once the interest rate goes down, guess what? Prices are going to rise. So if the interest rates stay high, your prices are going to decrease. So you don't marry the interest rate. Okay. You can always refinance to get a lower rate when your credit gets better or whatever the case may be. And the sixth point I want to make is buy like an investor. Investors ask, is this neighborhood improving? Are jobs moving nearby? Is development happening? Can I afford the payment? And that's the biggest thing. People get so caught up in, oh, I got approved for 400,000. They want to max it out. Can you afford that? They don't ask, can I perfectly time the market? There is no perfect time in the market. That's just like if you invest in the stock market. There is perfect time in the market though with that. You have to, you go and you get it, but it's more or less you get it at a price point that you want. And that's what real estate is. You get it at the price point that you want by negotiating. You can still, just because a house is listed for a certain amount doesn't mean that it's going to sell for that amount. It doesn't mean that. Especially if it's been on the market for 30 days or more. You have more leverage when a home has been on the market for months because they're looking to sell. So, what's stopping you from buying right now? Is it your credit? Is it the down payment? Is it student loans? Is it fear of the market? Is it fear of owning a home? I've had people, I'm so scared to own a home because they just have so many misconceptions about home ownership because we're hearing so much noise. Or you're just not sure where to start. You start by getting the education. So drop any questions that you have in the chat. I would love to answer anything. I know you might go back and watch it. I appreciate the ones that's going back and watching it. I really, really do. Watching this replay. Ask me any questions. You can DM me, put it in the chat, put it in the comments, and I will definitely get back with you. So the people who win in real estate aren't always the people with the most money. They're often the ones who take action before everyone else did. It's all about that action. So if you want to find out whether you're closer to buying than you think, send me a message with the word home and let's create a game plan for you because I want you to understand that this is possible. It's not impossible. I know your finances might look a certain way. You might not have this money, that money. You have what it takes. You just have to sit down and make a plan to get there. We plan out every single thing. We plan trips, we plan birthday parties, we plan to do all these different types of things. But when it comes to our finances, we tend to let that fall by the wayside. We tend not to look at it in a way, okay, if I do this, if I do this, if I cut back this. And people think when you cut back, it's such a bad thing. You're only a lot of times you're cutting off excess fat from the things that you already know you didn't need anyway. So that's why I tell people, when you do your budget, start with your bank statements. Look at what you're actually spending per month. And then go from there. You got to go one step at a time. One step at a time, people. Are you ready? You ready to take the step? So I am here. I have my book, Keys to Your Castle, that you can purchase. That link is on the screen and it will be in the description section of my YouTube channel. My Facebook stopped working, but it is what it is. They're going to catch it the way that they catch it. But yeah, definitely check out my book. It has everything that you need to become an homeowner and beyond. This will get you prepared beyond any type of first-time home buyer, workshop that you're going to take. I also have my Pathway to Keys program. If you personally want one-on-one coaching, you can comment Pathway and we can sit down and walk through that together. So I bid you adieu, and I'll see you next week for Real Estate Thursday. Have an amazing day. Bye, YouTube is Fia.